We got one of those reports this morning that on the headline looks really poor for the economy. It is Tuesday, January the 28th, and this morning we got the preliminary reading on durable goods orders. And this is important because durable goods orders go directly into the GDP calculation. And what we saw is at the headline level, which includes, there's no Xing out of aircraft or anything at the headline level, it's been the third consecutive monthly drop, and it was much worse than expected. The survey had actually expected it to be up 0.6, and it declined by 2.2% and was revised lower in the prior month. Now, this is where we got to kind of decipher what's good news, bad news, what's the headline, and what's the true underlying reading. Now, durable goods orders can be quite noisy because it does include not only defense aircraft, but non-defense aircraft. And what we saw for December, non-defense aircraft actually fell 45.7%. It's down 46% on a year-over-year basis. So that dragged that headline level down. But if you look at capital goods orders, excluding defense and aircraft, that actually rose 0.5% for the month. And that was better than expected. The expectation was that it would be up 0.3%. And it was even revised a little bit higher in the prior month. So what this is telling us is we should have a good input into the fourth quarter GDP. This is the preliminary reading, though. This is subject to change. From a market perspective, equities are getting a bit of a rebound today after that tech-led sell-off yesterday with the news coming out of China and with their AI developments. But here in the U.S., from the fixed income side, we're seeing today that the yields are backing up a bit because this was a good report from an economic standpoint. And then we have the Fed meeting tomorrow. What will this do for the Federal Reserve? We don't think that the Fed's going to make any adjustments to monetary policy. We think that they'll stay on hold, and it's the statement that we're going to have to pierce through to see exactly what the future of Fed rate cuts look like. So again, a pretty decent report for the economy to close out 2024, and we will be back tomorrow with the information out of the Federal Reserve. If you would like these podcasts, please subscribe, hit that alarm bell. If you want to share it with friends or colleagues. Also, if you want a history of our podcast, you can go to marketswithmegan.fm. Thank you.